fear, and you need the bulls to have fear, and that's hard. Bulls aren't very scared of shit, if you've ever met one.
Oh yeah, I mean,
I
well,
think I'm a bull. I know I went really bearish.
I would say your
summer.
risk management is in line with a bull. I've heard about your daily deployment of your children's college fund into GME.
I'm just, yeah. No, I'm bullish.
I know
I
you
know a
are.
lot of people are in deep despair on GME, and yeah, it's uncharted territory, and it feels like it's going to go down forever. But
It always
I
feels
don't
that
feel
way.
I don't feel that way. I
I'm not.
see. Well, I mean, so what we're seeing on the market is kind of what I've been expecting and waiting to see on GME, because I see a lot of the same things. They changed their strategy after the split from buying a ton of in the money puts, which they have still done.
Actually, I don't know if you were around for that conversation or that part of the conversation that we had with Turd, but it was really interesting to look at the correlation between GME and XRT from May to August, and just like another data point that kind of reveals that they just walked away from the short vol positions, which would still mean that our overall or overarching thesis of all of GME's price actions simply being driven by these synthetic short positions is still accurate. And the
Yeah,
only data supported theory that I've heard on GME so far.
but the thing that's been occurring recently, like in the last quarter, is just this endless barrage of sold calls, right? I mean, usually we look at sold calls and we think, bullish momentum is killed. People bought calls and now they're giving up before we saw anything. But it got to a point where I was like, okay, there's more calls being sold than I think were ever bought.
Yeah.
And so I think that's what's happening right now is, short vol by selling calls, which is happening all over the market. You get the benefit of theta working for you instead of against you. And so when those close, things start to get exciting. So you have shorts who are buying in the money puts to keep the price down, to protect their short. There's their real shorts with synthetics, and then you have the vols who are keeping the price down by selling calls.
What's really interesting about that, and here's where this gets exciting, I think, and I don't want to interrupt your train of thought, but I want to point this out to people, is that given the nature of these positions and the synthetic liquidity used, there's kind of a interesting caveat with those sold calls, is that not they're not collateralized, they're naked sold calls, right?
Oh yeah.
And what's really interesting there is that the ETFs do not have the liquidity to sustain the OCC margin requirements for those calls moving into the money, right? Because those shares don't exist. They cannot be collateralized with the OCC. And when you have a call that moves in the money, it very much acts the way DRS would. The OCC demands collateral proof from the broker dealer. I actually think the requirements are a bit more stringent than a locate, because those shares become then deliverable to the counterparty, right? And this is something we noticed with the effect of retail selling large amounts of covered calls in the past, is that as the price moved up, the capitulation of those covered calls, the pullback started to affect the borrow rate, like we saw in May. May saw this massive increase in borrow rate in a very short period of time, because all of a sudden there were all these collateralized calls going in the money. The OCC was pulling back all those shares, and then that leaves the only pool of available liquidity, the borrow pool, right? And so it gets kind of interesting that they have these naked calls that are out of the money, but they can't let them go in the money. So if they were at risk at maybe that gamma flip point, which they're mostly sold above, but if they're at risk, they have to pull them back immediately, and that is a huge catalyst for price action from the market maker side.